Hey folks, welcome to another educational video from Federal Employee Benefit Advisors. And if you have tuned into our most recent segments, we've been talking a lot about Federal Employee Group Life Insurance and the fact that Federal Employee Group Life Insurance is an inferior insurance product. And hopefully that was helpful to you. And so we're going to continue our series, but we're going to change subject matters here. We're going to turn our attention to the Thrift Savings Plan, and specifically the TSP 75. The TSP 75 is the actual number designation for the form that the federal employee uses in order to utilize the in-service age-based withdrawal opportunity. Okay, so let's talk about that a little bit. The in-service age-based withdrawal opportunity allows any current federal employee that is age 59 and a half or older to take control of their TSP funds, either the fully vested balance or a partial balance, and move it to their own IRA. Now, let's talk about some of the reasons you may want to consider that. And let me say this, the Thrift Savings Plan is a wonderful savings plan. It's structured very well for accumulation. In other words, while you're working in your working years, as you're adding money to that and as you're receiving the match, if you're under the FERS plan, it accumulates, so it's structured very well for that. However, if you look very closely at the Thrift Savings Plan, you will soon find out that the TSP does not function well in the distribution phase in your life. In other words, distribution to you in the form of income and distribution to your beneficiaries. So let's discuss some of those things to help you understand. First of all, the Thrift Savings Plan only allows one partial withdrawal throughout the life of the account. Now, if you think about that, that is a very restrictive situation. So as an example, let's say that you left all of your funds with TSP, you retired, and you decided, oh, I'm going to take some money out of this Thrift Savings Plan account and take a nice long vacation. You know, I've worked all of these years, accumulated all this money, I'm going to go have a little bit of fun and I'm going to relax. So let's say you take $10,000 out, you go on a real nice vacation, and you come back and a few months later you decide that you need a new refrigerator, as an example. And so you contact Thrift Savings Plan and you let them know that you need a couple of thousand or 3,000 or whatever you're spending on this refrigerator, and they inform you that they cannot grant your request. They cannot process that request because you have already exercised your option on your one-time partial withdrawal. So how do you get the money out? Well, there's the problem. Getting money out of Thrift Savings Plan and using it for income is very restrictive. So we've already talked about the one-time partial withdrawal option. So once you've taken a partial withdrawal, which is either a withdrawal of $500 or more, whether you transfer it somewhere or whether you take distribution on it, that is a partial withdrawal. Once you've done that, you can never take another partial withdrawal. So you're limited to the following options. You can take a monthly distribution from the TSP. However, it's very restrictive as well. You can only change the amount that you're receiving one time per year during open season. So if you think about that for a moment, let's say that you're in open season, or excuse me, let's just say you make the decision to take $1,000 a month as an example. And so you're receiving that $1,000 a month. And let's say that you discover that's not enough. You're not really receiving enough money. Well, you're out of luck. You can't make a change on that. You can't increase it unless you're in open season. And then once you change it, then you're stuck again until open season. But let's say that you're receiving a monthly amount and you discover it's more than what you need. Well, then you have another problem because you're paying taxes on money you're not using. Okay, you shouldn't pay taxes on money you're not using. Okay, but you can't change that, and you can't put that money back in TSP. It is not flexible. So you can't take money out and then put it back in. So you can see that that's a problem, okay? The other option that you have is to annuitize the account. Now this is a big no-no, and the reason is because if you annuitize your funds, what you're doing is you're giving TSP complete control and authority over those funds, and what they will do, they will transfer it over to MetLife, and MetLife will pay out a period certain amount. In other words, they're going to pay out a specified amount over a specified period of time. You can't change it. It's irrevocable. You never have access to the cash again. You essentially handcuff yourself and lock yourself out from the cash. Big mistake if you do that, in my opinion. Why would you want to lose all of that control of those funds? The other option you would have is to take a full lump sum distribution. Well, pretty easy to figure out that that could cause a huge tax liability, because the distribution that you take would be added to your income in the year that you receive it. So it could escalate your household income into a higher tax bracket. Bottom line is it's going to be a potentially serious tax problem. So how do we solve that? Well, if you move it to an IRA, you're going to eliminate the limited partial withdrawal issue. You can take multiple partial withdrawals from an IRA. You can take money out and you can put it back in. You can add new money if you want. Okay? You can establish a lifetime income stream you can never outlive with an IRA. I call it purchasing a pension. It's an additional personal pension to the one that you have from FERS or CSRS. Okay? You can take interest only if you want. So there are numerous ways to take income from the IRA, and you're not required to annuitize it. You're not going to handcuff yourself with some type of income option. Let's talk about multi-generational planning. The TSP is not fully multi-generational, as is an IRA. Here's an example. Let's say you, as the federal employee, you pass away, and in this case, let's say that you're married, you have a spouse. Let's say you pass away and your spouse steps into the TSP, it then becomes a beneficiary TSP. Now in this scenario, let's assume that there are children involved. So now you, as the employee, you've passed away, the spouse steps in, takes it over, it becomes a beneficiary TSP. Well, let's say that that surviving spouse passes away, and let's say there's 2 children involved, it could be 1 or 2 or whatever, non-spousal beneficiaries. They cannot continue the TSP. They cannot roll it to an IRA. They are forced to take full lump sum distribution of that account. It will be added to their income in the year they receive it. It's what we call a tax time bomb. Huge potential tax liability. Now let's talk about self-management risk. You have the G, the F, the C, the S, the I, and of course the life cycle funds. Now, you may be very comfortable in throwing darts at a wall with those allocations, but a lot of people are not comfortable with that, and many federal employees are not trained or educated on asset allocation or management. So with that said, especially in retirement, you're tempted to go in the CS or I fund for a greater growth potential. However, as many of you probably know, in 2008, the CS and I fund lost anywhere from 38 to 42% of its value. You can't afford to take a hit like that in retirement because you don't have time to recover. Then you look at the G fund. Well, the G fund's safe. Yes, it is, but it has inflation risk. The G fund historically has barely kept up with inflation. Rarely has it exceeded inflation. So you have self-management risk as well. Okay? Now, give us a call at 417-429-0331. Again, that is 417-429-0331. And if you go to extension 314, we can give you more information, discuss your TSP, help give you options, give you all the IRA options. We can get a package out to you in the mail that will help you better understand this. Thanks for tuning in. Hopefully this has been helpful. Give us a call if we can help.